Back to Yahoo Finance Live. It is game on for Microsoft. The stock is moving higher on its latest earnings results, helped by its gaming unit. But the company is warning about a revenue decline as supply chain concerns continue to constrain the supply of consoles. The firm's also saying it's seeing lower engagement in games. Joining us with more is Rishi Jaluria. He's RBC Capital Markets software equity analyst. Rishi, good to have you on today. You're certainly bullish on Microsoft. When I think about where your price target is right now, $380 a share, way more upside than what we're seeing today. What did you take away yesterday from the call as the biggest driver moving forward?
Yeah, and thanks so much for having me. Always great to be here. Look, to me, the biggest driver really is going to be cloud, right? It's on the enterprise software side. It's Azure, it's Office 365, it's Teams, just everything surrounding the cloud is going to be the biggest growth driver. But, this is a company that all the different businesses seem to be doing well. There are the near-term cautions around supply chain on Xbox and other hardware side, and we can talk about that in a second. But really, I think cloud and Azure are the standouts, and the outlook, I think, puts to bed all the macro worries people had about, the Russia-Ukraine situation spilling over into Western Europe, recessionary fears in the near term.
So let's talk about the gaming unit. We were just showing Xbox hardware there, revenue up 14%, but we've heard all the anecdotes from people who are trying to get a console. There's just not enough to meet the demand right now. How do you think that creates a headwind for Microsoft? Because this is a company that's also been investing in the cloud. We're talking about subscription services. They've sort of played both sides, the console side as well as the gaming cloud side.
Yeah, look, the way that I'm thinking about it is already the supply chain concerns were out there, right? Even going back to the holiday season, they said they couldn't manufacture enough Xboxes to meet demand, and this with the China lockdowns is only getting worse, right? And they did provide guidance that says it could get even worse than that if lockdowns in China extend past May. Really, I think it speaks to and to your point in terms of what impact could this have, it has a follow-on impact, right? It's not just the hardware sales, right? If they cannot sell enough Xboxes to meet demand, that leads to less demand for Game Pass. That leads to less demand for actual games on the Xbox console, and the workloads associated with that go onto Azure, which I think that integration is a major competitive advantage for them. That starts to lag as well. So we're definitely keeping our eyes closely on any relief in the supply chain issues. For now, we think all of that is priced in, but again, if things get worse or extend later than Microsoft thinks, then we may need to revisit a couple expectations on the gaming side.
You talked about Azure being a competitive advantage for Microsoft in the gaming space. If you look at a competitor like Sony, for example, they certainly don't have that. You've now got the Activision acquisition in play, expanding the catalog significantly in terms of the games they offer. Where does that put Microsoft in the larger gaming landscape?
Yeah, I think Microsoft has, with Azure, right? They have the advantage that they own the entire stack. So the infrastructure, the platform underlying Xbox, right? Think about the actual gaming downloads and the software updates. That all goes through their own network, and no one else has that, right? Sony doesn't have that. Nintendo doesn't have that. And then with Activision, you think about their vision with Game Pass, right? It's an overused phrase, but it's accurate. It's to be the Netflix of gaming, right? That anyone who is a gamer, Game Pass becomes a must-have. And once you integrate the Activision acquisition, that portfolio becomes so massive that really anyone who's a gamer has to have Xbox Game Pass. So I think both what I'm saying about Azure is a competitive advantage, but I also think layering on Activision to what Microsoft already has gives them, I think, a very big competitive advantage on the gaming versus the likes of Sony and Nintendo.
Rishi, we're seeing a pop in the stock today, up nearly 6% or more than 6%. Microsoft certainly hasn't been immune from the big tech sell-off that we've seen, but at least if you look at the earnings results, it does show in some ways the resilience of the company, just given how diversified their portfolio is. Are we going to start to see more of a diversion among these tech stocks?
I think so, right? I think one thing that we're starting to pay more and more attention to in this environment is what is a need to have solution versus a nice to have solution, right? And I think we can all agree if you're running your business on Microsoft Azure or you're using Office 365 to work on your productivity or you're using Teams to collaborate, this is really important stuff that you cannot get rid of, right? And even there's some ways they're benefiting from the labor shortages with LinkedIn and Power Apps. I think more discretionary items of software, if there is any sort of pressure on IT budgets from macro uncertainty, from interest rates, inflation, whatever have you, I think those will be affected significantly earlier than Microsoft will, right? I think Microsoft, with their kind of more mission critical software, as well as their more enterprise focus, does make them more resilient than a lot of other vendors in the space.
Rishi Jaluria, RBC Capital Markets software equity analyst. Good to talk to you.